A New Year's resolution for some New Mexicans may be to get out of credit card debt, and the new Federal Card Act may help. On February 20th, the rules in the credit card game will swing to the consumer's advantage, forcing banks to be more transparent and limiting some of their formal profitable practices. But the banks lobbied for time. Between the time the Card Act passed and the time it will be implemented, some banks have raised consumers' interest rates. Kenneth Lay, president of Vision Credit, a credit counseling nonprofit that serves New Mexico, says they've received a lot of calls from consumers whose interest rates went up.
We've gotten a lot of calls. Credit card companies did rush to raise interest rates on a lot of their accounts. Many of those were done all through last year, and almost every major creditor started feeling the heat from Congress. There was some action in the House, but never went through to the Senate to speed up these implementation dates, and so they stopped raising rates proactively. With the exception of Citibank, they actually did keep on doing that beyond even as late as November, whereas Bank of America, Capital One, Discover, they all stopped voluntarily prior to that.
For customers whose interest rates have gone up, Lay says it's worth a phone call to the credit card company, but the advantage in the negotiation will still be with the bank.
It is worth making a phone call. However, it's probably going to be difficult for them to negotiate a lower rate like they used to. Some things that they can do to increase their chances of getting approved for a lower rate is start making much higher than the minimum payment. If you have a minimum payment of $100, send them $250 for 3 consecutive months. It shows a lot of financial strength, and that's the type of customer that they don't want to lose.
After February 20th, the banks will no longer be able to arbitrarily raise customers' interest rates. The Card Act also puts limits on fees, among other changes. Lay says this will help level the playing field for consumers.
Banks are pressured by their shareholders to maximize profits, just like any other for-profit corporation, and they tended to change the way that they put fees in, the way that they manipulated due dates, and all kinds of anti-consumer practices that were happening before. They can't do that anymore. So it levels the playing field. It gives customers a fighting chance now.
Banks now have to show good reason for increasing their rates. Practices like universal default, where banks can change rates due to missed payments on other bills, will no longer be legal.
One of the practices that used to be in effect was called universal default. If you defaulted on a Citibank credit card, for example, then another bank like Bank of America or anyone else could look at your credit report, see that late payment, and say, "Oh, well, that's justification for us raising your rate." That's history. They can't do that anymore.
The banks also can't charge late fees on every billing cycle.
Late fees, they can, first of all, they have to disclose it on the statement, on each monthly statement, what the late fee is, whether you fall behind or not. They have to put that on there. And there's also a limitation on how frequently they can charge those. For example, they can't issue a late fee in back-to-back months. The way the law is written is kind of unique that they can charge it on the first month, but then they can't charge it again until the third month. That piling on of late fees, that of course becomes part of your minimum payment requirement, that can keep some people from ever catching up again. The idea is designed to reduce the amount that's going into their minimum payment requirement so that they can get back on track again.
The Card Act also requires credit card companies to make their billing dates consistent. For example, if your bill is due on the 10th one month, it must be due on the 10th every month.
What we were seeing as recently as 2009 is they were fluctuating that due date a little bit, and so people that had automatic payments set up through online bill payment services, they were falling behind and getting hit with those late fees. They can't do that anymore.
Kenneth Lay says the new act is a big change to the industry. It will change the face of consumer credit and will protect most cardholders. Where it falls short is that it doesn't protect people from annual fees.
That's going to be one of the big opportunities for banks to try to recoup some of those lost profits. I'll give you an example. Bank of America has already tested annual fees on approximately 1% of their cardholders. And they've been trying annual fees of anywhere from $20 to $99 to see what type of protest they'll get from those customers. And depending on that, how that test goes, they may roll out annual fees to more of their cardholders.
Lay says the most important thing for people to do if they want to get out of credit card debt is to not miss a payment. This might be easier said than done. If one cannot pay, there are other solutions.
If it's a short-term situation, something that you think can be cured within a 6-month period of time, then you need to call them and ask for a hardship consideration. You can call the card company directly, ask for that with them, and just state your case. And just say, hey, it's been tough, but I think I can get back on track. I just need some help for about 3 or 4 months. If you can help me out for the next 6, that would really be great. If it's chronic, if it's something that you can't cure in a 6-month period, you need credit counseling and you need to get it now.
Kenneth Lay, president of Vision Credit. For KSFR News, this is Rachel Kennedy.